I'm Oliver Schofield. I'm a director at Lignum Risk Partners. I'm also managing partner of a company called Risks, which is a specialist independent risk consultancy firm. I've been in the alternative risk transfer and alternative risk financing industry since the mid-1980s. And over my time, I've specialised in putting together new capital solutions for hard to insure or uninsurable risk exposures. The problem that we have in the market in the UK is that there is insufficient knowledge when it comes to being able to price and underwrite the risk of timber in construction in the most appropriate manner. I'm also interested in the whole timber space because we all have a responsibility as businesses and individuals to continue to reduce our carbon footprint and to drive towards net zero wherever we can. No, it doesn't. From the point of view of data and information, there is a wealth of data all over the world where organisations have successfully used timber in construction for many, many, many decades. That data exists within architectural firms, within engineering firms, within overseas insurance and reinsurance firms. It exists in risk consultancy firms and in construction consultancy firms. So the data is there. The problem is that the data doesn't relate to activity in the UK, and trying to ensure that that data is transferred into a UK market environment where underwriters can fully understand it and be able to therefore analyse it and price risk accordingly has proved to be a major stumbling block. Part of it is due to the geographic differences that we see around the world. The risk exposures of a timber building in warmer countries is going to be very different from the risk of exposure for timber building in different climates. Obviously, in this country, we have much more rain than in other locations, and that can therefore cause a problem with ingress of water. If you look at places like Australia, which typically doesn't have as much rain as we would in the Northern Hemisphere, that danger, that risk is less pronounced. However, I think the other issue is that the typical model of underwriting is that data, when it is analysed, underwriters will try and analyse that from a position of if that were to be in this country. And therefore, that data that we are gathering from other countries is less relevant to the activities that clients wish to undertake in the UK. There has been some detailed research undertaken by the large professional reinsurance market, and they do now have quite a useful data bank of knowledge and information that they would like to be able to use to be able to provide solutions to the issue of using timber in construction in the UK. I think the second part of that is that we very much need to get the industry to come together to be able to share knowledge, share information, share data, share experiences, so that from a pure UK perspective, we can then really build that shared data bank that everybody can access for the benefit of all and for the benefit of being able to push the use of timber in construction to a much, much higher level in this country. So I think the drive for getting the industry to work together lies at the end point, and the end point is the increased use of timber in construction and therefore being able to achieve carbon net zero goals that different organisations have laid down for themselves. As we're all swimming in the same direction towards that ultimate goal, that should drive a desire for collaboration across the various different strands of the overall industry. We should see the collaboration from the insurance markets, the financial markets, the reinsurance markets. We should also see the collaboration from the developers, from the contractors, from the architects, the engineers, everybody involved in that space. And certainly what we've been trying to do at Lignum Risk Partners for the last year or so is to start that conversation, to start that coming together where people can share ideas in a very open way, but obviously having a certain amount of respect for the confidentialities of their own businesses. Finding a common problem, such as the unavailability of insurance for the use of timber in construction, we believe is going to help garner that effort, garner those organisations to come together to try and find a solution and therefore be willing to share their knowledge for the common good. Historically, the alternative risk financing market has been very supportive of industries that are facing problems when it comes to being able to find capacity at economically attractive prices, and also, from a coverage perspective, broad enough cover for the exposures that they face. Examples that I've personally been involved in over the many years have been putting together solutions for organisations that suddenly found themselves with very large asbestos exposures on their balance sheets. Now, the traditional insurance market had drawn the line under the renewing insurance policies with asbestos coverage, and understandably so. But that doesn't mean that that organisation suddenly no longer had that exposure. They needed to find a solution for that. There have also been some very notable examples where industry groups have come together to form a new capital solution. We've seen that in the North American railroad sector. We've seen that in the European pharmaceutical sector. We've seen it in the worldwide energy sector. So there are many examples where this has actually been successful. And what we're looking at is how can we build a new capital solution for the construction sector, specifically where they are using timber in their construction. So typically the alternative risk transfer and the alternative risk financing market are looking to support organisations or industry groups where there is an issue from the point of view of being able to provide capital, provide capacity in the traditional methodology. We all know that there are many, many exposures that businesses face that cannot be classified as pure insurance risks. And that is because the insurance market doesn't actually see them as being risks that they can quantify, risks that they can identify, risks that they can then analyse and build a solution to. When we move into the professional reinsurance market and the financial markets, they are very keen to develop relationships with organisations who have identified and quantified those risks and are looking at a way of being able to finance those risks over a period of time. Now, looking at what we're working on in the timber space, we're going to be partnering with private equity firms, capital markets, reinsurance markets, who can look at the industry and the good performers in the industry and see that actually what they are doing is for the benefit of the construction industry as a whole, but also for benefit for the climate as well. And therefore they are prepared and interested to be able to use their capital to support that initiative, because they can have that relationship with the individual buyers to really get into the guts of what that organisation is doing, and therefore have a much better view for what the potential for loss and potential for risk is. The exposures that businesses and industries face around the world are very, very challenging. The key to be able to find that new capital solution is being able to, first of all, fully understand what the drivers are for what that industry is looking to achieve in the short, medium, long term. Secondly, being able to understand what the risk exposures associated with those drivers are. Thirdly, being able to engage with the alternative financial market to encourage them to be able to use their capital to deploy for the creation of a new solution. These things take time. If they were readily available on the shelf, they wouldn't be alternative. So we need time, we need consensus, we need that community of interest from various different sources coming together to build that solution. So we've been engaged by a group of developers here in the UK, large developers in the UK, to put together a feasibility study that will assess and analyse, first of all, the exposures that those organisations face. Secondly, how they are going to drive towards carbon net zero by the increased use of timber in construction in the UK. And thirdly, to see whether or not there is a solution that can be delivered to them by accessing the alternative risk financing markets. We've started that project. We're midway through it. We are engaging with those individual developers to understand fully what their demands, their needs, their blockers, their challenges are, so that we can build a solution that is appropriate for them around that. If we start at the end of the process, which is finding a solution to enable those organisations to actually be able to increase the use of timber in their construction, then I'm very optimistic. We have had conversations over the last year or so with various capital providers who have all given us a very positive response to what we are trying to do. So I remain very optimistic about it. Putting aside all those outside influences, such as the availability of capital, which we absolutely do believe is there, ultimately, we all have to work together to be able to find that solution to enable organisations to increase the use of timber. It's really not a question of can we do this, it's a fact. We must do this.